In this video, let's have a look at investing activities, then we'll conclude with financing activities. The first challenge in preparing the statement of cash flows is to decide which pieces of information belong in the investing activities section of the statement of cash flows. As you may remember, investing activities include cash flows from the sale or purchase of long-term assets and investments. Information to compute cash flows from investing activities is usually found by comparing the beginning and ending balance sheets and analyzing the income statement. We can usually explain the changes in each account by reconstructing transactions. We might even prepare T accounts and journal entries to help determine the right amounts. In this example, notes receivable decrease between 2015 and 2016. The change is $2,000. Perhaps a company received a $2,000 cash payment on the notes. If so, a $2,000 cash inflow would be reflected in the investing activities section of the statement. Assume equipment was purchased for $8,400, explaining the increase in property and equipment. This amount would be reflected as a cash outflow in the investing activities section. Assuming no property and equipment was sold, the increase of $7,200 in accumulated depreciation would be explained by depreciation expense, which is already accounted for in the operating activities section as an adjustment to net income. Sometimes, though, it's not quite so simple as looking at the balance sheet and income statement. We have to track down additional information, such as whether notes were both issued and paid, or if plant assets were both purchased and sold. And finally, remember that interest and dividend income are already accounted for in operating activities because they are part of net income. Property and equipment can be a challenge when assets are sold. Here's a quick example. Assume a property or a factory with a book value of $100 and original cost of $800 was sold at a loss of $10. Can you determine how much cash was received? First, we can create T accounts to determine that accumulated depreciation must have a credit balance of $700 if the cost was $800 and the book value was $100. Second, we can determine the amount of cash we received by creating a journal entry to mimic a sale of assets and solve for the amount of cash received. Debits have to equal credits, right? So credit the asset account factory for $800, debit accumulated depreciation for $700, debit loss on sale for $10. To keep debits equal to credits, you must be missing a $90 debit to cash. When we sell an asset, cash received is equal to book value minus a loss, or it is equal to book value plus a gain. Let's see the impact on the statement of cash flows. Be careful here. The sale price belongs in the investing section. However, the gain or loss belongs in the operating section. In this case, the loss is added back to net income in the operating activities section, and the cash received from the sale of the factory is a cash inflow within the investing activities section. Notice that the cash plus the loss, $90 plus $10, equals the book value of $100, which was the amount of the asset removed from the balance sheet. Let's consider another example. Are these investing activities? Well, the sale of equipment, yes, it's a long-term asset. So are the truck, the land, and long-term investments in stock. What about depreciation? Nope, that was already handled in the operating activities section. It was added back to net income as a non-cash expense. Remember, we don't include the same thing in two places for the statement of cash flows. Let's look a little more carefully. Our first item is the sale of equipment. If equipment with a book value of $78,000 is sold at a loss of $36,000, how much cash was received? Remember, cash received is determined by subtracting the loss from the book value. So $78,000 minus $36,000 equals $42,000. Now the second item was for the purchase of equipment in the amount of $89,000. We spent the cash, so it is shown as a decrease in the investing section. What about the sale of land? Do you need to calculate anything? No, the amount of cash received is given to us in the facts, $425,000. The same thing is true with the amount received from the sale of investments. We received cash of $14,750. Now we just total up the cash inflows and outflows to get the total cash provided by operating activities of $441,800. Our next video will be about the financing section.